Here in this video, we have lots of Tesla and broad market news to get into. I hope you are ready. If you are, tap, tickle, touch, or smash the like button. Different strokes for different folks, whatever floats your boat. And let's go ahead and get into it. One of the biggest news for Tesla today is the fact that Tesla is doing a 1.6 million vehicle recall, specifically in China, because a market regulator says there's an issue with FSD and autopilot. For most of the recall, 7,500 units of the Model S and X also need a more physical recall due to the doors unlocking during collisions. Now, this actually could set up a major catalyst that could be coming next. We heard about 2.5 weeks ago that FSD was likely to enter the Chinese market and start being sold, or at least an option to purchase with every Tesla sold in China, starting in December or January. Now today it's January 5th and you're getting a 1.6 million vehicle over-the-air recall or update, whatever terminology you want to use. And we just got this rumor a couple of weeks ago. This could be the last frontier or last step before entering the Chinese market officially. Of course, Wall Street is not going to pick up on this, so Tesla stock's not going to be green today based on this assumption is ultimately what it is. But I think it's really just putting 2 and 2 together and equaling 4 here. It seems pretty logical to me. Now, this upcoming catalyst could boost Tesla stock 5 to 10% in a single day. And that's because why? Well, EPS estimates would need to go higher, margins would improve, thus Tesla might actually be trading a lot cheaper today than after we get this announcement in China. Let me know what you think down below in the comment section. What is one that mainstream media is definitely focusing on? This is the fact that EPA range estimates have fallen for all Tesla models. This is because the EPA now says that you have to test in the best and the worst possible conditions. So this is going to make the discrepancy between, hey, I thought my Tesla got 350 miles. Compared to when you actually get like 320 miles, you're like, what the heck, right? I'm sure you guys witnessed that as well at some point in your journey if you are a Tesla owner. Well, hopefully that is a little bit more accurate now. We are seeing that the Model Y's range dropped by about 20 miles. The Model S and X range was dropped by about 37 miles. But keep in mind, nothing changed about your vehicle. You still have the same vehicle. It still gets the same amount of range as it did yesterday. This is also going to affect other EVs as well. The Ford F-150 Lightning, the ID4, they're all, if they're sold in the US, that is, going to have to get these same changes, and I can only imagine what their numbers are going to look like. Tesla has launched the new stealth gray color for the Model Y in the US for $0 additional cost. The Ultra Red now costs $2,000. Samsung is partnering up with Tesla on energy management for smart homes. It will connect Samsung's SmartThings energy platform to Tesla products such as Powerwall home battery, solar inverters, wall connector charging solutions, and EVs. We don't know exactly what this will do or what this might mean for the Tesla experience or sellability of these different products, but I doubt it's a bad thing, and it looks pretty cool from my perspective. It looks like Pharrell Williams just pulled up to a Louis Vuitton store in his new Cybertruck. If you're unfamiliar who he is, well, he's one of the chief designers for Louis Vuitton, and he does have about 30 million different followers across all of his platforms. So this is some pretty good publicity for Tesla. Tesla also announced today they have now installed 55,000 supercharger stalls worldwide. This comes just 3.5 months after Tesla installed its 50,000th. That's an average of 44 new supercharger stalls opened per day. IF Metals suggested a compromise that might finally end the strike against Tesla. According to IF Metals contract secretary, the strike against Tesla Sweden could end if the automaker follows Amazon's lead and hires a contractor. Tesla is removing creep and roll stopping modes from the Tesla Model 3 and the Model Y in the US. French automotive supplier Velo will showcase wireless EV charging solutions in Las Vegas at CES 2024 next week. They claim efficiency above 90% from grid to battery. The UK reported 5,517 Tesla sales and 3.9% market share for December. The Model Y was also the best-selling car in the country. Overall, Tesla sales in Europe grew by 57%, reaching 364,000 cars. As Roland Percher points out, the only reason we didn't set a new quarterly record was that a ship from China had to take a much longer route around Africa due to security issues in the Suez Canal. The ship arrived too late for Q4. Gary Black writes on X, it's worth repeating that Tesla buybacks only work long term, not short term. On a short term at 2024 PE of 61x, buybacks aren't accretive. 1/61x, 1.6% yield after tax. Long term, they add value because long term earnings are significantly higher. 2030 EPS of $22 a share on $238 per share is 9.2% earnings yield. IRR at 13.6%. Gary Black recently came out with a new list of catalysts for Tesla in 2024, and one of those on his list is a $10 billion share buyback at some point in 2024, and he has received quite a bit of backlash on this. Personally, I think it's not a terrible place to put some capital if you really want to be a little bit more conservative. $10 billion buyback, well, they don't have to do that all at once. They don't have to do it at all. It just gives them an option to buy back stock. So theoretically, if they say, hey, we're going to do a $10 billion buyback, well, maybe not at these prices. Maybe it puts a floor on some downside if we do get weakness here in the markets anymore. Then Tesla could buy back stock at cheaper prices. It doesn't mean Tesla has to spend $10 billion actually buying stock back. It's basically like an option. It gives them the right to buy $10 billion worth of their own stock. That's where I think a lot of people are a bit confused about a share buyback. It does not happen all at once, and it's not even a guarantee that it will happen if it's announced. Today, we did have big economic data that came out. Stocks are mostly lower today because it was just so strong. The non-farm payrolls came in at 216,000. The estimate was 170,000. So you beat this by what, almost 50,000 jobs? That's not really saying we need cuts coming in March, although that's still priced in. Currently, odds stand at 70% that we get the first rate cut in March. What's actually interesting is yesterday, the probability was 60.5%. So it's up about 9.5% just today alone. So the non-farm payrolls for December came in well above expectations. That's actually a good thing because we want to avoid a recession at all costs. The unemployment rate came in at 3.7%. Estimates were 3.8%. So that's also very bullish. As Charlie Balio here on X points out, the U.S. unemployment rate has now been below 4% for 23 straight months, the longest streak since the late 1960s. So it's kind of hard to say that you're heading into a weakening economy. I mean, as long as people keep their jobs, I think things are going just fine. And as long as we don't have some form of black swan event that is obviously in the terminology, a black swan event we cannot forecast anyways, well, things look pretty good from here. The ISM Services PMI did give some people a little bit of jitters though, because this was expected to weaken 1 point from 52.7 in November to 52.6 in December. You came in at 50.6, so you weakened about, 2% essentially. That's not a great sign, specifically when you look into what really did poorly. If you look at ISM Services prices paid, that came in lower than expectations. That's good, means maybe less inflationary pressures at 57.4. ISM new orders came in at 52.8. ISM Services employment came in at 43.3. Both of these way low than expectations. 3% miss here on new orders and like a 7% miss here on employment. ISM services business activity came in a little bit better than expectations at 56.6, and factory orders excluding transportation also seeing quite a big miss, coming in at 0.1%. Estimate was 0.7%. Factory orders did beat, coming in at 2.6%. Estimate was about 1.8%. All in all, this was great economic data that we got today. This is exactly what we wanted to see. But I do think right now, part of the reason why stocks look like they're going to close out today red is, well, it's just been so good. And this does maybe push out how many rate cuts we get in 2024, which is not exactly great. And if we don't get rate cuts soon, then that might ultimately mean we head into recession. It sounds more complicated than it actually is. I think maybe one of the biggest bottom lines to point out as well is Wall Street doesn't exactly know how things are going to shape up, right? We don't know how the labor market's going to be fully throughout 2024. We have a pretty good idea it's going to be okay, at least for the first half. What's the second half of 2024 look like? What does earnings season look like, in which we're heading into that just around the corner? When a lot of Wall Street has some big gains out there, they're selling first and they're going to ask questions later. So inevitably, by the time we actually get to big tech earnings, which Tesla reports earnings on January 24th, I believe Apple is on February 1st. Don't quote me on that. I don't think they've officially confirmed the date yet. Then, I mean, we'll have a little bit more clarity. And I think by the time we actually head into those events, stocks are already going to be pricing in maybe bad earnings anyways. So maybe even mediocre earnings is okay enough for our markets. But we'll obviously have to wait and see. It does look pretty clear that Tesla is going to have good earnings, and hopefully they have some good things to say on the earnings call. We've seen less leasing with Q4 deliveries, only about 2%. That's the lowest we've seen in years, so that should look good for earnings. As well as that, Tesla delivered about 5,500 more other models. This includes the Model S, the X, and presumably the Cybertruck. Hopefully there's good news on the Cybertruck, because we don't know exactly how many deliveries were made in Q4 of the Cybertruck. But at the bare minimum, Tesla ran down their inventory over 5,000 for S, X, and Cybertruck. That's going to be good for margins, and that's going to be good for the top line as well. We did recently get a new AI investor sentiment survey. You are 48.6% bullish, 27.9% neutral, and 23.5% bearish. We actually want to see the bears grow here and increase, because the week ending December 27th, you were 25.1% bearish. The more bears here, the more potential upside there could be. When everyone's bullish, that's usually not when stocks continue to rally. Tesla's inventory numbers showing a bit of a slowdown here for the Model Y. That's actually great news to see that come down. The Model 3 and the Model X continue to fall, whereas the Model X has recently gotten a boost of about 600 units in inventory. Google Trends data for the Cybertruck, Model 3, and Model Y all look strong, but really just trading sideways from here. We're not really seeing any big spike or big falls. And Tesla recently stepped up their advertising campaign, going from running about 300 different ads for months since the summertime, now running about 400 different ads. The percentage of stocks above their 50-day moving average today is down about 0.5% to 77.68%, pretty much the highs of the summer rally back in July. As I previously mentioned, markets are still pricing in the first rate cut in March, and the markets are still pricing in 6 rate cuts in total for 2024, and the odds of that actually rose. The odds of 7 rate cuts went from 18.7% yesterday to 23.7% here today. A lot of this is probably because we're implying services via the services PMI in this next inflation report are probably going to come down as well. Or service inflation, maybe I should say. Tesla option activity today looks very strong as well. You have seen 431 hedge fund institutional options trades. These are picked up on the scanner. These are large trades. These are not retail investor trades. You had these 431 orders totaling $1.6 billion with a positive order value of 63%. Considering options are mostly used as hedging a larger long position, That's very good. Tesla's short position currently stands at $20.32 billion. Tesla remains the most heavily shorted single stock on our markets. Tesla's short interest is about 2% of the entire stock market's short interest itself. So any potential good news here, good earnings, FSD entering the Chinese market maybe, could send Tesla stock up big time, and, well, over $20 billion worth of shorts are going to have a very unpleasant day. Tesla stock is down about 0.25% today. This will be the 5th day in a row that, well, maybe the 6th. 1, 2, 3, 4, 5, 6th day in a row since Q4 deliveries that Tesla stock closes in the red. Now, that could change here in the last 40 minutes or so of trading, but it really sets you up in a position that is good for an upside, potential trade or rally here. As you can see today, Tesla stock bounced right off of the 50-day moving average. That sits at $234.92 per share. That's great news, but you are seeing a lot of resistance as well around the 100-day moving average. So you're back in this demand zone in which we were here for a while, finding support at the 50-day moving average, finding resistance at the 100-day moving average, just really bobbing and weaving here. We did this for a whole month from November 14th through December 13th. You just bobbed in this like $20 range for 4 weeks straight. I don't know if we're back to that. If we get above the 100-day moving average, maybe the rally does continue from here. That's my expectation. That's what the options chain itself looks like. We'll go over that here in the next video. People are pretty bullish, though, on Tesla around Tesla earnings and even after that. Tesla is also on the oversold side at 43.58. Neutral is 50. So Tesla's not super oversold here, but it's definitely on the oversold side. And the MACD is also curling downwards, which is negative here in the short term, but overall, again, says Tesla is probably due for a large bounce. Here on the day today, TLT is down about 1%. Not exactly great news. Oil is up 2% as well. Not exactly great news. The dollar, slightly green. Not a big problem there. And gold as well, slightly green. Looks like bounced right off of this bullish trend line, and it looks like gold probably wants to go higher again. 10-year treasury yields are also up about 6 basis points to 4.05%. That's not exactly great either. We've rallied about 25 basis points or so in just the past, 10 days. So that's definitely putting some pressure on our markets also. That is going to do it for this video. Let me know what you think about all of this information down below in the comment section. If I missed something, also let me know down below in the comment section. If you guys want to come trade with us for the entirety of 2024, hopefully come hit some big trades with us like we did in 2023, check out that link down below in the description of this video. You guys have a great rest of your day. My name is Michael Tyler, and I will see you in the next one.